Ever noticed how price seems to hunt your stop loss before moving exactly to where you plan? That's not coincidence, that's price seeking liquidity. They trade markets, I trade my namesake. My name is Gold. I'm not just a trader, but I'm a trader who trades only a namesake. Gold on gold. Let's get into it. Today we're breaking down liquidity and inducement, not theory, but how they play out in the real market. So what is liquidity? Liquidity is simply money. It is where the money is resting in the market. It's the stop losses, the buy stops, the sell stops, all others resting above and below structures. That's what fuels every single candle you see on your chart. So if liquidity is money, let's see. So we have liquidity in our swing highs, our swing lows. We have liquidity in our swing lows. We have liquidity in our equal highs because majority of the time you will see price come, sweep them out, and then the buy stops that are here that should trigger them in for breakout and retest traders, it will trigger them in and then it will sell, taking out their stop losses and the stop loss of these early sellers. Same thing here, sweeps them out, triggers the sell stops and then sells. Our trend line liquidity, same thing happens. Price comes, uses this as liquidity, uses this as liquidity, and then probably buy at this extreme, and then we'll continue with the sell. Same here with the buy, take this out, use this, and then we'll continue with the buy. Our support and resistance, which is more like consolidation, either you stay out of the trade, like I always say, but their liquidity is resting above and below. So what will market do? Market will take one side of the liquidity out first, probably take this and then continue bearish, taking this people out and then also taking these people out. So all these are areas where liquidity is pending. Now for inducement, if liquidity is money, inducement is a trap, is the trap before the real move. Yeah, liquidity is the trap before the real move. And for our liquidity, we have types of liquidity. Let me see. We have buy side, sell side, we have internal, we have external. So we have buy side liquidity, we have sell side liquidity, we have internal range liquidity, and we have external range liquidity. These are all types of liquidity. Now, buy side and sell side liquidity can also be internal and external range. But majority of the time, we also have buy side and sell side internally. Yeah, we also have buy side and sell side internally. Our buy side and sell side, something like this. Let me use this. So we're going bullish and then we do something like this. Now, this is liquidity right here. Yeah, this is liquidity which was created before the extreme zone. Yeah, and then we get a break of structure. Now this is an internal liquidity, this is an internal range liquidity, while this swing high is an external range liquidity. Our external range liquidity comprises of swing highs and swing lows, while our internal range comprises of inducement, fair value gap, and the La Linear liquidity. Those are all internal liquidity. Let's, without further ado, let's just head over the chart. Just know that inducement is a trap. It takes place before the real move begins. So if you don't know where your inducement or your liquidity is on the chart, just know that yes, you get it right. So this is our external range. This also is our external range. This is our external range. Now you can see our internal range here. This is an inducement. Okay, so another thing that I forgot to mention is that inducement should break structure. Yeah, inducement should break structure. A liquidity must not necessarily break structure, but an inducement should break structure. What am I doing? So this is our internal range liquidity here. This was an internal range liquidity, price took it out. And then this FVG also is an internal range liquidity. You can see price tapped into it before going to take out our external range. And you can see this equal highs here. This is also money resting here. And you see price took out their stop loss because people sold here. That's why you got this push down. People sold here, so price came, took out all their stop losses, and then took out the external range liquidity. So when we are in an uptrend, we are protecting the swing lows. And when we are in a downtrend, we are protecting the swing highs. So that means this is a buy side liquidity because we are taking out the buys. So this is a buy side liquidity. This is a sell side liquidity. So it's the same thing for your swing highs and swing lows. When you are in an uptrend, you take out the buy side liquidity. Alright, it should not be that I'm speaking French. So this is buy side. Call it external or you call it buy side. Let me clone this. So this is a sell side. So this is a sell side liquidity. So it's just best, don't confuse yourself. But why we have these different buy side, sell side is that here also you can call it sell side liquidity. These two double top liquidity, you can call it buy side liquidity. Here it's not necessarily like here now, because you can't call this internal range, and you can't keep calling this inducement. So this low right here taking out is your sell side liquidity. This low right here taking out, this is a mini downtrend, is your sell side liquidity. This here also is your sell side liquidity, and then this here also is your sell side rather, is your sell side liquidity. And you can see price came and used it after taking out this inducement. Why is it an inducement? Whenever you see before price broke structure here and it pulls back like this, use this FVG to go. When price returns back, just know that this inducement will be used for that POI. It holds majority of the time. It holds majority of the time. I was taught, I learned, I back tested, and now I trust that pattern like mad. All right, so all these are sell side liquidity taken and they are internally. Now price moves from internal to external. That's how price moves from internal to external. Now you can see all these have been done internally and price use this area. Now what's the next target? You should know that your next target should be the next external range liquidity. It's simple. And after the external range liquidity is taken, what will you do? You simply be patient for price to pull back into an internal range liquidity. It's not that you should rush and start buying here. No, you should wait for price to pull back into an internal range liquidity or give you a structure like here now. We got this break. So we now have something that we can work with. But it's not once it broke out, we now start buying. No, you might be the next liquidity and then the move down will come because price move from internal to external, then external to internal, then internal to external again. Yeah. So you can see we got this break and then we got this break here. Price use an internal range liquidity, which was this from this FVG. which was that. And then when price retraced, price used this other block that has an FVG above it. And then you can see price now created an inducement. This is an inducement. What did I tell you an inducement is? It must have a break of structure. What's the difference between an inducement and liquidity? The main difference, let me know in the comment section. Let me understand that yes, you're truly following me. Give me the difference between money from liquidity, which is money, and an inducement, which is trap. I gave you two major differences that you should easily identify them. So let me know the difference in the comment section. So you can see price use this inducement and then mitigated this other block right here before going to break structure to the upside. So this happens again and again, over and over again. Price keeps using it. Price moves from internal to external. You can see price use this FVG here, which overlaps with mitigation block, which overlaps with breakout block because it took liquidity. If you've not watched my video on mitigation and breakout block, you should go and watch. That is a premium video that I gave you there. Trust me. So now we've taken out the external range again. So we've taken out the external range liquidity. Can you notice how price moved from internal to external? From internal to external. Now, you'll be saying, oh, this FVG, it does not have liquidity. How am I going to know if I'm not liquidity? Now, see, if you've not watched my FVG video, you should go and watch it. Once you see two FVGs lining up like this, just know that the first one, majority of the time, the first one will be used as liquidity. Then the second one would hold. Especially when it overlaps with breakout block, mitigation block, just know that this one, majority of the time, will hold. Yeah? That's an expo. Put it in one hand. Now, we now got a pullback. After this external range was broken, we got a pullback into this area. If you check, I think 4 hours, all this area here have fair value gap. I trade fair value gap a lot because price seeks two things, liquidity and fair value gap. So why should I be trading what I don't know? I will trade what price seeks. So especially if you're a good trader, you see, when you trade liquidity and imbalances, your life will be easier. Then other block happens once in a while. Yeah, other block happens once in a while. But if you know those three, FVG, liquidity, other block, then your breaker and mitigation block, my darling, and all is in this is on my YouTube page. So make sure you watch them. You will learn a lot. Alright, so you can see price came internally, mitigated this zone, and then what next? It went straight to take out external range liquidity. So this proves that here, price moves from internal to external. Now you can see again, price came into this internal range liquidity, and then onto the next, we took out the external range liquidity. Yeah, you can see here is double top. Here's our double top, and what did price do? Price took it all out. Yeah, so let's go to the 4 hours. Like I said, after this break, taking out the external range, you can see price taking out the internal. This is the sell side liquidity, which is internal. Remember I said both our external. This is also a sell side liquidity. Do you understand? This is also a sell side liquidity. This is also a buy side liquidity. But it's an external range liquidity. Now, if you zoom out probably to the daily, you also see that all these ones here too are still internal, and we have external range here. Yeah. So it all depends. The more you zoom, the more you get to know. But here, right here, because this is the structure we are focused on. It depends on the structure you are focusing on at a particular time. This structure we are focusing on now, this is our swing low, this is our swing high, which means This is our external range liquidity. This is our external range liquidity, and all these here are our internal range liquidity. I told you that your substructures are your internal range liquidities, and your swing highs and swing lows are your external range liquidities. Yeah. So these are our internal range liquidities. What's wrong with you now? These are our internal range liquidity getting taken out. Now, you see this trap that was said here. We got a sweep. We saw this inducement that pull back. What did I tell you that inducement must do to be considered an inducement? Let me know in the comment section. So this right here is our order block. If you know how I pick my order block from now, if you don't know, please go watch my order block video, and you can see how it moved smoothly. So if you bought here, you are going to be the liquidity. Just know that. There's no fighting about it. Also here, you can see price engineered liquidity to be taken out before the buy, and then our external range got taken out. So here again, we can see external range has been taken, and we started taking internal price move from internal to external. And then this trap that was here, if you go to 1 hour, you will see it is an inducement. Now, inducement is not one single candle like a consolidation. Why I'm taking this as an inducement? Because it's in 4 hours. If you go to the 1 hour, let's go to the 1 hour. There's no need to talk too much. You can see now this is an inducement. It is not one single candle. Don't tell me that this guy here is your inducement. That is not an inducement, guy. Don't let me come and beat you while you are drawing nonsense on your chart. This right here is not an inducement. This one here is an inducement. Yeah, this is an inducement. I picked it because I know if you go to the 1 hour, you will see clearly that this is a valid inducement. So you can see our trend line liquidity. Now you can see all these are where buyers bought, and then their stop losses are below here. Same thing here. So what the price do? Price will come, take this out as well, while protecting our external range liquidity. Why? Because we are buying. You can see the high. If you zoom out, this is our swing leg from here. It has not been taken out, so this is our swing leg here. So you can see price took them all out, then use the extreme orders, filled in the extreme orders, and started buying. Price does this over and over again. Yeah, from internal to external, from internal to external. And then when you see inducements, you should know that area will be a trap for buyers. This is an inducement right here. This is an inducement right here. So this is our order block. This is our order block. And you can see price tab into it, taking out this trap here. This is trap because people will buy from here. People will definitely buy from here. You can see equal lows here. Yeah. So support resistance traders would definitely have bought from here, take out the external range liquidity. But what the price did? Price took them all out, tapped into this zone, and bought heavily. So price does this again and again and again. So ask yourself before you take any trade, where is the money and where is the trap? If you don't know where those two are, just know that your A plus setup is the trap that will get taken before the main move. I hope you got value in this video. If you did, like, share, turn on the notification bell so that when I post, you will be the first to be notified. Alright, I'll see you in my next videos. For now, bye.